welcome to this very special show on ET Now. I'm Ruchi Bhatia. India's economy has seen growth sliding to multi-year lows, and that has prompted calls for greater government intervention. As Finance Minister Nirmala Sitharaman presents her budget on the 1st of February, she has her task cut out. To talk about that and a lot more, I'm joined by three very eminent guests on the show. Joining me now on ET Now is Ms. Kiran Majumdar Shaw of Biocon, Mr. Naushad Forbes joining all the way from Pune of Forbes Marshall, and also Mr. Rajeev Talwar of DLF. Sir, thanks for taking your time out and speaking to us at ET Now. Mr. Forbes, let me first come to you. You know, just before doing this show, I read a very interesting article which said that a good budget this year is going to take the skill of a trapeze artist. These are definitely extraordinary times that we're talking about. Are you also hoping for extraordinary action by the government?
So I think we do need extraordinary actions by the government. I wouldn't expect all of those extraordinary actions to be taken in the budget itself. There needs to be a longer term process, of which one important piece will be the budget and its announcements itself. And I think in the budget itself, we should look for a combination of things. We should look for the right approach in terms of realism, real numbers that come across in the budget. We should look for transparency in terms of what the actual state of the deficit is and the revenue and expenditure expectations. And we should look for both things that address the short-term pain of the budget and the immediate needs for recovery and a boost, and the long-term aspirations that we have as a country, and therefore the kinds of institutional mechanisms that need to be put into place for long-run economic growth. So it'll need to be a balancing act. It'll need to balance out short and long-term priorities. It'll need to balance out the need to be realistic with the need to actually provide a stimulus in the short run. And it will need to balance out, obviously, the fiscal arithmetic of what we can afford now with what the economy needs and demands.
Absolutely, it has to be a balancing act. Mr. Talwar, if I can come to you, the government has to look at reviving demand, attracting investment, pleasing equity markets, breathing a life into the realty and the NBFC space. Of course, there's a lot riding on this budget for Finance Minister Nirmala Sitharaman. And in fact, for the Prime Minister, the task is definitely cut out, right?
Absolutely, and I think they are doing a job. The first part of it, I think Naushad's gone very well on the background and what is required in general. But to say that, yes, the Finance Minister has been meeting every section of industry and economy regularly ever since the budget in July. Similarly, the Prime Minister has done a meeting with all the big industrialists. So I think what we should be expecting is a revival of demand. You rightly said NBFCs. I think the first thing I'd like to come to my sector, because we all believe that a revival of the real estate, housing and construction sector would lead to a very major uptick on the GDP growth and the numbers in general for employment also. What we are hoping for is that there's a job which has been done about the fund for 25,000 crores. There's 70,000 crores which has been given for NBFC and funding there. What we would expect is that, like 2008, when the global meltdown took place, there was a once rollover. I think that needs to be done, which can be done. Secondly, the subvention scheme. And I think a big step which can be taken right now is for promotion of rental housing. We've seen commercial leasing getting in billions of dollars into the economy. Similarly, rental housing with a standard deduction increased from 30 to 50%. Will increase the rate of return by maybe 4 to 6%. I think those are the major things which should be expected right now.
Absolutely. In fact, I am going to, spend a lot of time on the real estate sector and what needs to be done to breathe life into the real estate sector and NBFCs. But let me take it across to Kiran Majumdar Shaw. Ms. Shaw, everybody has been talking about how there is a need to spend. The growth projections, if you look at most global rating agencies and most global agencies, including the IMF, even for the next year, is still at just about 6%, which means the nominal GDP is going to be low. The tax collection expectations too will be low. How large can the government really afford the fiscal gap to be? Because at the end of the day, we will have rating agencies pouncing on us, and we also have to look at the sustainability of debt as well.
So the way I look at it is, yes, I think consumption is a big challenge. I think creating demand is a big challenge. And personally, I believe we should be focusing on investment and exports, because I think those are the two areas that can actually start getting the investment cycle and the economic cycle revived. Because I think without investment, you will not be able to raise demand or consumption. So I think how do you kickstart the whole consumption cycle will depend on the investment cycle getting revived. And that's where I think the biggest challenge we have in the economy today. And that's where I hope the finance minister will actually focus on many of the incentives that we are talking about. We must bring back fixed investment, which has sharply declined over the last 2 years. Okay. Now, if you want to do that, we are looking at various sectors where, of course, the government infrastructure is one very important area where you need to increase investments. But then look at the other private sector investment needs where it's not happening. Let's take, for example, our own business, which is the pharmaceutical industry, the biopharma industry, which, as you know, are very capital intensive in investment, but they're also job creating and they're also export oriented. So some of these sectors are extremely important when it comes to really announcing investment incentives. So that's where I hope that we will see some of those measures being taken. We need tax holidays. We need the SEZ sunset clause to be extended by hopefully another 5 years. So I think these are some of the low-hanging fruits available to us to get those investment cycles going. And then we are talking about, of course, export incentives. I think there's a lot of anomalies that need to be corrected in terms of the way we are going about our export production. I think manufacturing is another big opportunity where it needs investment and incentives. Otherwise, you're not going to see manufacturing deliver on the promise. So that's the way I look at it. And of course, consumption has other kind of quick fixes, but it's not a sustainable option if you're not creating jobs, if you're not creating investment cycles. It's all very interconnected. So how are you, going to get those wheels turning? And to me, the way you get the first cog moving is investment.
Absolutely. You have to focus on investment, something that the Chief Economic Advisor also spoke about in his last economic survey, and which is why, let me come to you, Mr. Forbes. Everybody's been talking about how the need of the hour at this point of time is, tax cuts, personal income tax cut. Everybody's been talking about it, that after corporate tax cut, we should be looking at personal income tax cuts as well. And you have Ms. Shaw there saying that just boosting consumption by these short-term fixes is not going to help. Do you concur with that view?
I do indeed. I personally think, we would all be very sympathetic and all of us would obviously like a personal income tax cut. I do not think the fiscal situation actually permits that today. What we could perhaps ask for and look for is a phased removal of the surcharges over, say, the next 3 or 4 years. But to expect it to happen in the current scenario where we are as stressed fiscally as we are, I think would be somewhat irresponsible. I think actually, exactly as Kiran mentioned just now, we need to see how we can enhance investment and we need to see how we can enhance exports. And I would suggest 2 things for the investment side, 2 things for the export side. For the investment side, I think the already announced scheme of a trillion rupees of investment that would go into infrastructure is the absolute best way of also reviving the demand cycle, because that will create a lot of rural employment. When you build rural roads, for example, it can create mass employment in terms of public construction programs. That needs to be financed. That can be front loaded. It's because this is ₹1 trillion of investment over the next 4 years. It can be front loaded, and the way to finance it is then to finance it through a massive disinvestment program of public sector enterprises. And this massive disinvestment program is something that needs to start early in the year and not actually even be an annual cycle. It needs to be something that is ongoing and something, as you know, we will probably miss our disinvestment target for the current year massively. And we will miss it not because of any lack of interest in doing it by the government, but because they started too late. They started only 2 or 3 months ago instead of starting at the beginning of the year. So if we start right in the front, we'll be able to match these two things where we disinvest from public sector enterprises, privatize public sector enterprises, and use the proceeds to invest in public infrastructure that can stimulate demand. On the export side, very quickly,
Right.
Two things that I think are a great opportunity for us. One, anything that we can do to see a weaker rupee, to see a rupee which, for example, goes to 80 rupees to the dollar, that will be the absolute best way of stimulating exports. It's also, by the way, the absolute best way of making imports more expensive. And together with that, we can actually see the removal of the import tariffs that have increased over the last few years. Because a good way of actually enhancing export competitiveness is to actually enable imports, which very often involve then inputs and more competitive inputs coming into what we process locally, such that we can then be effective exporters.
Mr. Talwar, you're looking at the real estate sector very, very closely. The government for a very long time has been saying that they want to revive the real estate sector. They want to revive the infrastructure sector. And in the first term of the Modi government, we did see a lot of emphasis being given for the construction of roads and highways. But now we do see that things have kind of stagnated. Everybody's been talking about how even the national infrastructure pipeline that the government has put out, where will the funds really come in from? And the government really doesn't have enough money in their own kitty, and which is why there is a need to revive the confidence of the private sector to start investing in the infrastructure space. But at a time like this, when the banks themselves are over leveraged, what is it that the government can really do?
Actually, yes, they do need to raise revenue. I think for aiming for a $5 trillion economy or a $10 trillion economy with 1:10 tax to GDP ratio, we should be collecting $500 billion at least, or going towards that. So there needs to be some rationalization, because you don't have great room in the GST regime, because that would be decided by the GST and Council and not in the budget itself. So we do need to rationalize, like the corporate tax has been rationalized. But I do think we do have some room. For instance, the CRR, the cash reserve ratio, can be reduced. Similarly, we've got humongous foreign exchange reserves of $461 billion. And I think maybe what Mrs. Shaw was talking about, that yes, we do need export incentives, and you can set aside maybe $100 billion
from the RBI,
to be given
sir.
at... Correct. You need to do that, because that would be money coming back by increased exports. You're giving export credit at a lower rate, internationally competitive rate, maybe 1% plus LIBOR, and that should be coming back in the cycle and replenishing the amount that you're taking. Because manufacturing, infrastructure, real estate, exports, all of them need to be balanced, and you need greater big data mining in this country, so that the number of taxpayers increases, and therefore even lower rates contribute to a much higher tax collection. And of course, I think Mr. Forbes has brought out very well that infrastructure, I think elevated highways as a program. We normally end up spending so much money on land acquisition that if we went in for elevated highways, they would not only make faster economy, faster exports, but also provide a huge upside for steel and cement, which are two industries, and combined with infrastructure will generate a huge amount of employment.
But I don't think that's something that the government will immediately look at. I mean, this can be a long-term policy. Can it really be something that the government can perhaps actually look at in the budget, sir?
I think they can. I mean, they've always had programs for rural roads and for highways. It's time that, yes, as Mr. Forbes rightly said, let us generate money through disinvestment, higher tax collections and better tax collections, not necessarily higher rates, and use it in these areas. And we do have room with the foreign exchange reserves, we do have room in the CRR, bankers have been talking about it, and of course, the very fact that we should build it up on trust in business. It is private sector investment along with government investment which must play a role. It's not just only government investment, and for that they need to seed the private sector with a huge amount of trust that yes, this will come about, rather than everyone saying we are holding our horses back.
I'm glad that you touched about the issue of trust, because Finance Minister Nirmala Sitharaman has been saying that she's very willing to bridge the trust deficit with the private sector. And Ma'am Shaw, let me come to you. You were talking about how private investments will be key to the growth. The growth riding just on government spending is going to be very short-lived. It's going to be unsustainable. But N. Chandra, the top boss of Tata Sons, recently has said that India is fraught with micromanagement and suspicion, and it's fraught with the fact that there is a trust deficit that needs to be bridged. Would you say that Nirmala Sitharaman has to do whatever it takes in this budget to restore the confidence among the private players, because up until that time, things won't really get back on track?
No, absolutely. We need to bridge that trust deficit, and we need consistency in policy, because I don't think we should be flip-flopping, and that's what investors want to see in any economic climate. The other thing I also wanted to say was that public infra or government infrastructure spending is extremely important in terms of creating credible and trust filled kind of PPP models. And I think in that, one is of course to divest a lot of the public investments that the government has, to release the money to invest in infrastructure, which I think is very key to getting this whole revival cycle going in infra. But on the other hand, I think they need to partner with private sector through sort of giving tax holidays to the private partners to co-invest in creating these kind of big infra projects. I completely agree that infra development in India is going to generate jobs, and it will be very good for all the ancillary industries that are supporting infrastructure building, right from the engineering companies to the steel and cement and everything else that goes with infrastructure. I think this is a no-brainer, and the government must treat this as a low-hanging opportunity. And I think everything else has been said. I completely concur with Naushad that the export opportunity for India is huge, and we must kind of leverage a weak rupee to further become more competitive in exports. And I agree with him, we shouldn't try and artificially bolster the rupee. We should let it get to even the 80 rupee level so that we become far more competitive. So this is not a time when we need to really look at all those elements, because we are clearly seeing that the fiscal deficit is something that might need to be stretched a bit in order to address all the kind of economic revival plans that we have. So from that point of view, I wouldn't really worry about where the rupee really floats, So personally, I believe this is a huge challenge, but a challenge that can be addressed through some very innovative, financial thinking, and these kind of tax plans that can incentivize people to invest. To me, that's very, very key to get the economic cycle
Absolutely.
moving
So
again.
focus on infrastructure and focus on exports. Those are the two important areas that one should be focusing on. But Mr. Talwar, if I can come to you, you're looking at what's happening in the real estate sector very closely. The government has been talking about a one-time restructuring scheme that, if that can be given for a lot of real estate players, a lot of home buyers are stranded. We are seeing how government is intervening at various levels, whether it is a package that has to be worked out or whether companies like Unitech that have been now taken over by the centre. I just want to understand from you, there are various options that are on the table so far for the real estate sector. What do you think is going to be the best solution to revive the demand in the real estate sector?
Okay, 2 or 3 things only. Number one is what the subvention scheme was introduced a few years back, where the advance is given to the developer on behalf of the buyer, and the interest cost has to be borne by the developer till delivery. So that is a great step.
Right.
I think one more step which has been taken by the State Bank of India chairman is to lower home loans to 7.9%. If you recall, earlier also State Bank had introduced a scheme which was very popular. When it was 8%, 7.9 is even better. The third thing is to do away with minor irritants which curb any kind of expenditure and investment into housing. What are those? Number one, long-term capital gains.
Right.
How was it said that you could only buy one house if you sold another house? You've now increased it to 2, but why such a constraint? The second part, that interest paid on home loans was fixed at 2 lakhs more than a decade back. Please index it for inflation, whatever it comes to, 4 or 5, allow that. It will give a great relief to home buyers. Number 3, that yes, a tax on notional rent. I mean, that's a no-brainer again, that yes, remove that. I mean, allow for rental housing, increase a return on rental housing, and you will not need for any taxman to start saying how many houses are lying vacant and how many houses are, or residential apartments are lying unsold. I think we need to remove these, allow people to invest, allow people to get a good return, and thereby collect more taxes. I think that should be the way forward. And of course, there are some others which have been given in writing to the finance ministry, but they need to be looked at by the finance ministry itself.
You know, the budget making exercise has already kick-started. The printing of the budget documents also, in fact,
Correct.
underway. Here's
Yes.
hoping that the finance minister is hearing what Mr. Talwar is saying. But Mr. Forbes, let me come to you. You know, there is also a lot of talk about how there is a need to really look at the NBFC space as well. There are a lot of pain points after the crisis in IL&FS. We've seen the entire NBFC space really falling like a pack of cards. What is it that needs to be done? Because the government now has been saying that we're fixing the liquidity issues in the NBFC sector, but you know, there are pain points that still exists in the NBFC space. How important will be for the finance minister to focus on the NBFC space as well in the upcoming budget?
Well, I'm not entirely sure what can be done in the budget per se on the NBFC to sort out the NBFC issues, but certainly the action there's certainly action needed there. I think if you take the top NBFCs, if you take, say, the top 20 NBFCs in the country, one could look at the stress that some of them are facing. Many of them are facing especially stress that's related directly actually to the real estate sector. It's related to lending to developers. Lending to home buyers has been quite solid and has not been actually a source of significant NPAs, but lending to real estate developers has been a source of NBFC stress. And one can really look at the portfolios of the NBFCs and say, what's the issue that they actually face? Is it an issue of solvency? Is it an issue of liquidity? Or is it an issue of governance? And depending on which of those issues are actually at play in that particular NBFC, then you have the right course of action. If it's a liquidity problem, a matching of revenue and repayment of debt, one can address that very directly through various loan schemes. If it's an issue of solvency, then one needs to address it. If an asset book of 80,000 crores is backed by 100,000 crores of debt, there's clearly a solvency problem, and there'll be a need for all the owners of debt to take a 20% haircut on the debt that they have outstanding for that NBFC, and then together with that you would change the management of the NBFC and the governance, and address therefore the governance of it. So I think depending on what the issue is of the NBFCs, many of them I think are reasonably well known, one can address it given adequate will and adequate desire to act speedily. It won't happen in the budget, but it can happen in parallel in a fairly effective way by those who understand the sector a lot better than I do.
Okay, let me, I'm really running, short on time, and my last question is for Ms. Shaw. Ms. Shaw, very quickly, if you have to give one advice to the finance minister now, just 10 days ahead of the budget, what is that going to be?
Well, I don't think I can give advice at this stage, but I think we have all given a large number of suggestions to the finance minister, and I hope that many of them are considered and announced, because like I said, I think you've heard it from all of us. I think we have opportunities to address the investment needs, the needs to basically revive the economy through various measures. And I would say one big advice, like Naushad said, is please focus on public sector disinvestment as fast as possible, because the government needs to free up capital to invest in infrastructure. That to me is one of the biggest opportunities that we have to revive the economy, and I hope that that's being thought of. And I think the private sector also needs to focus on partnering the government in infra development, and for that I hope there are some fiscal incentives that invite and get the private sector to invest in public infrastructure.
All right, that of course is some of the wish list and demands of India Inc. But on that note, Ms. Shaw, Mr. Forbes, as well as Mr. Talwar, many thanks for taking your time out and speaking to us at ET Now. With that, it's a wrap on this edition of the show. Many thanks for watching. Do stay tuned to ET Now for more news and updates.